FXBros.
Oh, all right, guys, we are back. Sunday, August 11th. Got to break down this Australian dollar chart. As you can see, we starting off late into the Sunday as we open trading. We have a bullish engulfing setting up here. Got here. Signal entry was here to add. We already in buys from last week. I think it was on a 4 hour, the last entry I had, which was this one, I believe. This retest, basically retesting off of here. Remember, this gap was from May 1st. So that was that first leg off that old low, the low of the year, the old low of the year. This first initial leg right here, we had that this gap scenario, even though we had one lower here, but that pretty much got full with here. Ultimately, we did feel this and create a new low of the year, but nonetheless, this was like the target to either sweep this for sure bounce off this this structure. And as you can see, predominantly we have done so. Even though we broke through this area and really broke through this old range from November 14th, 2023, this old gap. So not only did we hold here from this first leg of the bullish move that we were in from our initial low of the year. This is the first initial low of the year in April. So that was our first initial target coming down. It was at least potentially maybe going to sweep this. If we would have broke this and continued lower, then we possibly be in a sale. And as you can see, we did break it, but we didn't continue lower. We broke it, and as soon as we got an opportunity, the market gave us a bullish engulfing right through that same level, the low right here. Bam, broke right through it. So this was voided out for us to continue lower. Because if we would continue lower from this point, the market would have retested, which was, what price was that? That low, that first leg was 64.62. So 64.62 up in here. Down. Bullish engulfing on Monday, 4 hour, 9 a.m. That was the buy right there. You know, if it was going to be a continuation for bears, we would have broke below this price like we did, struggled to break back above, which we did this first hour, and the second one probably would have tapped right above that area. What was that, 62? Right above this area to this flag pattern line, or this bearish trend line I have. I guess you could call it the bullish trend line. But nonetheless, we would have hesitated right here and would have sold off and would continue for sales. That would have been a scenario. But as you can see, we did break higher. And not only did we come down and we retested off this leg, this lower trend line for this flag. So if I zoom out, you can see what I'm talking about, just right quick. See, I can get kind of like a picture. This right here. So this high, that low, connecting with this lower high. This lower high, this lower high, this lower high. Oh, that lower high, lower high, lower high, high, lower high, lower high, lower high. So basically, you can see the points where we connected this. Of course, you do have places where the market will break out. Um, that's none of our concern. The most is that we want to get at least 2 to 3 points, strong points connected, showing signs of resistance and support. And as you can see, we have scenarios lined up perfect. Like I said, we won't get it directly to the T as far as wicks and whatnot, even though this line could be adjusted for that. But basically, I read the price action as far as where I can see the points of interest have multiple touches within the same price and just struggling. And like I said, it's okay for price to break out. We just don't want breakout and a continuation. Look at all these scenarios where price broke out. Price broke out here, but still didn't give us a scenario of a retest, bounce, and continue higher. Price broke out to the downside, but still didn't give us a scenario where the price retested off of this trend line and then traded lower. None of those scenarios happened. So we are basically looking for a true breakout. Like I said, we did get bounces off of this trend line at the lower point, rejecting a new bearish continuation, but also creating a new low of the year. Rejecting this low or this lower range on Monday 5th. That wick that created lower, that was the new low of the year. I think that was also coming right after NFP too. I think I want to say that was interest rates for Australian dollar that came out on that Monday night. It was something. It was interest rate, inflation rate, or something for Australian dollar. I believe that was Monday night. That pretty much caused that sell off. Monday, okay, no. That was overall, that was really profit taking and stop loss hunting, if you really want to be honest. But it wasn't really news that pushed this lower. It was just a continuation of what NFP was already putting out there. Because non-farm payroll came around here on August 2nd on Friday, and we just saw it off into that. Sunday couldn't change the trajectory of that pattern, so we just sold it off as the algorithm played on. But it also played on to just tank, enticing retail traders into sales, ultimately turning back around to push back higher for bulls. And right now, the scenario is in play for us to potentially continue higher. We'll know more once these old highs from last week on Thursday get tested and potentially broken through. I would say the sweet spot that you want to wait for roughly 66.10. We do have a little price action over here. So I would say ultimately 66.10 would be a good area for targets. Right now we are at 65.85. So we're roughly 25 pips away from that. Very easy for the market to do. Daily doesn't close till tomorrow at 4 p.m. So we definitely got enough time for the market to reach these highs and potentially go higher. Now, for sure, which is crazy, that's going to line up to the bullish side of this trend line, but I wouldn't be surprised. And this would be the first level of targets. We're going to draw this out. And this is that area of interest that I believe the market can reach. It also goes in line with this flag pattern. So the market could definitely come up here potentially bounce, tapping into this gap. Or ultimately being able, because we did, got to remember, we did sweep the old low of the year, create a new low. So that's enough liquidity grab to really push us back up here. If the market wanted to and needed to, it has the power to do so. It doesn't have to, but it has the power, it has the story written into it for it to create the now new high. Because this wasn't a new high. It struggled to break above there. This is the old high right here. The first. So right up right here. Market struggled right here in July to break that or create that new high. So now that we broke the low off of this Monday opening week, right after NFP too. Like I said, it wasn't really news that broke that low, but there was just a continuation of the algorithm that the central banks have in play. So they swept that area, created a new low of the year, and quickly rejected it with a very large wick. If you look at it right here, it's a nice body to the candle and an extremely large wick that broke through this 4-hour gap from the 14th of last year. So November 14, 2023, we had a wide 4-hour gap that the market was looking to test. And not only did we reach that, but we broke through that, and a nice extension to 20 pips out to the downside. But nonetheless, like I said, market rejected that with a very extensive wick to the downside that we didn't feel just yet. So it's a potentially we still could feel this if we do if we see heavy sales. Like we said, we have to see big body candles with similar to this bullish candle right here. But we would need to see another situation like this where the market is just trending bearish for us to attack this properly. Oh, we got Scully on here. Oh no, we don't have that. My bad, bro. Let's see. So, like I said, this would be the first area of interest. It's lining up perfect to this this flag pattern here. This bullish trend line that we have up here is lining up perfect. What's up, brother?
What's happening, man? What's happening, bro?
Yeah, you already know.
Back to it, man. Another Sunday.
Yeah, man. I had my alarm set. I was over here crashed out, boy.
No, that's all good. I was
Quiet.
kicking it with the fam. I was kicking it to the with the fam.
Nah, you good. You good. I already know you but yeah, man,
But
I was knocked the hell out.
no, it's all good. I've been listening to it. I'm actually on the phone tapping in right now. But yeah, I was definitely listening to it. Definitely like what it's been doing so far. But yeah, you running it.
Yeah, man. We like I said, it's nice little area we can target all the way up here. I would say the 6650 just to be safe. 6650 would be a nice little area to set a take profit. Uh, and from where we are right now, we at 65.85. We're about 65 pips away from that. Something the market can do throughout now and tomorrow. Possibly could happen. I'm not gonna say it can't happen, but knowing this pair, if it did do that, or probably maybe wick up there, and maybe you would get more price action the next day, the following day. So looking at Monday evening on into Monday night, possibly you might actually get that push or that volume. Who knows? Like I said, this is the 4 hours too, so all of these candles are representing 4 hours worth of time. So gotta be patient on that. So let's go to the daily. Only thing I can say, the daily look like it could be setting up another little sandwich. We just basically been making nothing but sandwiches lately. Had one here from the low, followed by another powerful engulfing. sandwich, and we might be coming into another scenario. If if this daily candle can close above the previous, let's get these if it closes above the open of the previous day, which is at 65.90. So we are easily 7 pips away from there. So that is not hard to do. But like I said, this candle won't close until 4 p.m. tomorrow. So we have a lot of time before this candle closes. And being that the fact it's already a bullish scenario built into this daily candle, one could say we have a whole lot more time for it to also turn bearish. So we would need to look at the 1 hour and the 4 hour to see if we see any bearish engulfing patterns that can play into the scenario. Right now, we don't have that, but always keep in mind the market can flip. You know, this candle right here once was bullish. If you look at it, even though it was following an extreme bullish candle, so you kind of expecting this one to be maybe not as extreme, but still a nice, sizable candle, like something like this or like that, with not a lot of wicks on each side, just mostly all body type shit, basically like how this bullish one was. And pretty much this is a all body candle, but it wasn't really a dominant. It didn't engulf this one. It didn't continue bullish. But like I said, it did start off bullish. As you can see, this wick was once a bullish body candle. And then the market flip turned around. But like I said, this was kind of like one of those given scenarios. Because once the market extends this much, it does have to have some kind of pullback, some kind of resting period, some kind of breather. Just like any other type of piece of mechanic or a human runner. You have to take a break and chill for a little bit. But nonetheless, we're looking for the market as far as the daily to break this high and at least close above. It'll be nice for it to close above the wick, but I would say a good rule of thumb that you want to keep in mind of how far you will want to see price action is just simply pull out your fibs, which I really used to hate on. I used to hate on the fibs, but I have a greater appreciation for fibs now. And the 50% level is really all you need. You just want to look at like an equilibrium type situation. So basically start from the low to the high, and you want to look at 50%. So if I see that right there, I can draw that line. I can draw that line, 50%. Take this off, take that off, and bam. For us to have, for the story to kind of lean more to a guarantee for bullishness, the greatest story would be a market closing above here. But another situation, besides the fact that it could simply close above this high and give us a bullish sandwich, but if we close above, at least above here, which is 50% of this bullishness, that's pretty much all we need. Even I would like this even if the market closed above here, but wicked above here. At least give me some sign that you're trying to go above. So take that off because I'll be leaving shit on the charts like that, and it'll actually line up on a smaller time frame with some other price action, and I'll simply forget why the hell I put it on there. So gotta create a habit of taking that shit out. Weird. Let's see. Let's go to the weekly right quick. Take a glance at it. We are coming from a weekly bullish engulfing. Look at all the engulfings that happen. It's more of a stronger track record for continuation if it's following in the trend. Yeah, so normally, I'm not gonna lie, this one is slightly tricky because you got to look at it with a very keen eye. This range right here, this is like a low of the market. I know this is the low point. This is a low point, but this whole range right here is like the low. And as you can see, we drew this out, even though I'm not gonna draw, it's just gonna pull up all my drawings, but we drew the scenario out and stretched it out. You'll see how it's lining up with that low zone, that low range. Also, this point is matching up with this point. Normally, I would want it to really, for the market to show signs of bullishness and turn around at the exact low point or near the low of the market, whether a wick down or anything. The only reason why I really respect this one and can play off of this bullish engulfing, I mean, one, it's a weekly bullish engulfing. A lot of engulfings on a weekly tend to play out in the favor of that engulfing pattern. I can't say all of them work out to the T, but in some cases it will show you kind of early sign of where the market may be heading, or early sign of that the market is ready to turn around. Um, yeah, it's looking like it's rare that the market would give you a scenario like this and then just rip up, like totally disregard this and just rip up another half. I mean, but like I said, just like how this extended out, didn't bounce off of here and continue higher. If I look at this scenario and play it out, you can see how it's all lining up. Like nothing went higher than that, even though we did have this extension towards the end of the year of 2022, but it didn't retest off this low and continue higher. So that's signs of consolidation, true, but also we're able to read the market a little bit better in this scenario, and we're able to have a little bit more. We can be more calm in our patience, waiting for the right breakout. You know, it's boring as hell, but the proper scenario for a breakout to wait for is that breakout and a retest to a high or low of that range, and then a continuation. You know, you see a lot of
Yeah,
those.
I mean, on the higher time frames, I mean, it's just gonna take longer for those to play out. So that's what he means by just it being
Yeah,
boring in
yeah,
a sense. The time it takes for the next game is 2 weeks instead of 2 days.
right.
So are you gonna practice in those meantime, or you just go sit around and just be lazy and waiting and eager and stuff like that? So.
Right.
Or try and find another game somewhere that you're not even used to playing.
Facts, man. So I know it's hard for a lot. Like I mean, even for this scenario, I mean, if we look at this, it's not really a true little zone, but just as an example, we drew this out and extended it. We have two scenarios where right here you'll see this is a breakout, retest into that range, but didn't sell off. It kind of broke back into this little range right here we have. But then later on, we get another slight breakout. It does retest into that range and continue lower. That also played into the NFP, leading into this bearish extension, which created a new low of the year. Same scenario from this range right here. Market broke out higher, retest right at the top of that range, and now we're starting to see signs of maybe a bullish continuation. And I would say this would be more dominant and true that the market starts to trade upwards of these highs at 66.10, 66 flat. You know, I don't even have to hit that, but if it starts like right here, this little price action, these bodies where these bodies kind of meet up at 65.90, which, like I said, that was the high, that was the open of the previous day. So if we close above there, we have another sandwich engulfing bullish on the daily. So we are 7 pips away from that. So the market can easily trade above that, and that would play even more into this breakout retest continuation scenario. So takes a lot of patience. You do have to wait. You do have scenarios where it look like this is the move, but yeah, it's just best to wait. Like I said, this was the first sign. The fact that we retested back down to this range gave us a bearish engulfing, didn't continue into that bearish engulfing, and turn around and bounce bullish, giving us a bullish sandwich engulfing on the 4 hour as we continue higher right now. And we did break the high of the previous candle. So a little bit more of truth, behind the bulls. With that being said, let's see where the market can go and what type of scenario will give us enough volume for us to reach that level. I'm going to log into my FXBross. When second place isn't an option, trade with the #1 U.S. broker. Look how they got the nigga running track. Why? Because it's the Olympics going on, fam. Surprised they ain't got the soccer jersey up there. Hold on 1 second, guys. Give y'all the background. I gotta go do something right. Hold on 1 second. I'm going to be right back. I don't like leaving y'all dry.
Son, I love you.
So we got to do it like this. Be right back. Hold on 1 second. Yeah. All right. We back. Let's talk about the news. We have news on Monday. Westpac consumer confidence and NAB business confidence for the Australian dollar coming out tomorrow, late afternoon, early evening, 7:30, 8:30. High Australian dollar news. That's on Monday, so nothing Monday morning. Tuesday, we have news PPI month over month for USD, 7:30 in the morning on Tuesday. Wednesday, USD core inflation rate, core inflation rate year over year, inflation rate year over year, CPI. Oh my God. Wednesday is going to be a burner, 7:30 in the morning. Heavy.
Let's go. Let's go.
Inflation rate to pop it off. GBP inflation rate, 1 a.m. on Wednesday. Also, GDP growth rate for Japan on Wednesday. Unemployment rate and unemployment change for Australian dollar at 8:30 that night. Bruh, Wednesday, August 14th is going to be a day for the markets. If you are in the
Will that set the tone for this quarter?
yes,
I like it.
yes, I wouldn't be surprised if this is the move that takes us to that range I have, that targeted range. I wouldn't be surprised. Thursday, you already know retail sales, continuous jobless claims, initial jobless claims. And then we also have New York Empire State Manufacturing Index, and we have retail sales also coming out around that time. Um, Early that morning, we do have GDP growth rate coming out for GDP. But Thursday, of course, you already know that's our continuous jobless claims, initial jobless claims, and the 4-week average that we get every Thursday for the USD. Every Thursday, never fails. This news release will come out. If you are a news trader, you can simply trade Thursday and be good. It really does. Friday, August 16th, building permits and Michigan consumer sentiment. This news release is definitely an important one. Shows us all the building permits that are, I don't know, either approved or outstanding, but still a good indicator to show how far ahead we are into the future of America. Simply put, because the building permits will allow people to build, and that's just going to be the future outlook of America. Simple as that. Michigan consumer sentiment on Friday. So we do have 7:30 a.m. and 9 a.m. news on USD, and that's going to wrap up the week. But everybody's eyes is on Wednesday. Hands down, Wednesday is going to be the guard. That's going to be damn near more important than NFP.
That is a fact.
And the fact that NFP already created a scenario to create a new low of the year, I'm kind of not expecting CPI. The CPI to go bearish. Not saying that it can't, but I'm just going to say that NFP already did its thing. That's what I'm leaning more towards. Now, that's technicals. Fundamentals would need to be negative because the dollar would have to be negative for the Australian dollar to be positive. Again, looking at the charts. You look at, and they don't line up all the time, but it's a negatively correlated situation. So we see this move starting from Friday or Monday, July 15th, bearishness. Let's go to the DXY. July 15th. Not strong bullishness, but you can see how when we tanked so hard, the dollar had to show some signs of increase. Like the US dollar doesn't flow in line with the Australian dollar. The only way the US dollar will flow in line with that pair if it was flipped around. It would have to be the US dollar against the Australian dollar, not the AUD USD. It would have to be the USD AUD. If it was the USD AUD, then that would be a positively correlated situation. So as we see the market sell off of the DXY, we would see the market sell off of the USD AUD. Why? Because the USD is the dominant pair in that joint pair. Right now, the AUD is the dominant pair. So in that scenario, when we see Australian dollar news, we would, if we want to see the AUD fall or go bullish, like rise or go bullish, then we would want to see the Australian dollar news give positive or negative results. So that's how you play that scenario. Like I said, it doesn't line up to the T, but we did have some kind of bullish extension, especially after we swept this strong low. See how we got a strong low right here. Swept this, kind of came up. Then we played right back into the bearish scenario. So we look at this, the end of July, we see the bearish extension happen on DXY. We should see a bullish play out on Australian dollar. So what was that? That was July 30th, 31st, August 1st. It's Australian dollar. July 30th, 31st, August 1st. Like I said, it's not going in line with it. Yes, we did get this bearish sell-off. But nonetheless, the market still is really going. Like if you look at it on the 1 hour, you will see how we had this bullish, because we're looking at bullishness from this low, from that point. But nonetheless, we did still see a bullish reaction. It was just late. The bullishness didn't happen, I would say, especially from this wick rejection, but Tuesday on the 6th. So we'll look at DXY on the 6th. You know, we already, the move already happened. So basically, the DXY showed you, first off, right here on this extension, August 2nd, what to expect from the, Australian dollar. So we have August 2nd here. And we didn't get a domination right now, And if you would have just simply bought, just simply because like, oh, the XY selling off, Australian dollar should go bullish, you would be, you'd be crying. Especially, I mean, if you had the stop loss, cool, you out of there. But if you didn't, knowing most traders, they probably would have got out, type shit. Of course, if you'd have waited, the market turned out in your favor. But, that's after waiting over 100, damn near 70, 100 pips in drawdown, if you really sat through that. Like I said, it doesn't line up to the T perfect, but it is negatively correlated, hands down. And I would say, because back in the day, well, not back in the day, but last year, this showed a little bit better negative correlation. Right now, it's kind of like lagging. And I'm kind of just going to throw that up to, it's an election year. We're going to see a lot of weird ass lagging ass shit, throughout an election year. So I'm going to just chalk it up to that. But yeah, I think right now, as far as what it stands, we are looking for the first steps is to look for the open of the previous daily candle to be broken and close above, which is 7 pips away at 65.90. Next, after that, we would like for, on a 4 hour, this high with this little leg of price action right here to be broken at 65.10. So after we break into 65.90, the next level is 66.10. And if we break and close above there on the 4 hour, then I feel even more confident for us to hit this target of 66.50. So a nice little 40 pip grab if we get to this area. So be on the lookout for that. If we reject this, like a scenario where we reject these highs, but give us a body similar to these, so we get up here, reject these highs, and then give us a nice little small body like here, followed by another bearish engulfing, then yeah, we could easily probably target this again, break through it, but nonetheless, we have this other this lower trend line for this flag that we can still test or finally break through, get into this range and retest and continue to sell out. But the bullish scenario is more in play. Like I said, even from this extension out, break back above and retest, I already said the market failed. It was a fake out, and it was a very strong fake out, creating a new low of the year. And the fact that we broke back into this range and bounced off this lower trend line, I would say the next target would be this bullish trend line. And as you can see, the scenario is kind of playing into that. So I'm going to keep talking that talk and, in hopes that, the bulls continue. Simple as that. I mean, we only can follow price action. So we get a continuation of price action, we lock in. Just right quick, I want to give a little special shout out to one of my Lyft riders. It was, forgot his name. He did follow me, but cool guy I met. He was in the IT field, software design, coder. Great guy. Had a good conversation about finances and trading, day trading, investing. So we linked up. If you're watching this, bro, I'm dead serious about creating that bot. Writing code. Maybe you could look at my code on PineScript to see how we can improve on that and utilize it and turn it into a potential standalone bot. Something that we can set it and forget it. That'd be crazy. We create a bot, line it up to like a big, powerful brokerage, probably Oanda, or even something bigger, and then put a trust around it and lock it up for perpetuity for the family. So meaning it would never end. It's like your own bank.
Yeah, that's next level right there.
Next level. Next level. And the password to get into the account is you got to do a second line down. Not knowing how to second line is all the proof you need that you don't have access. You don't deserve access to that bread. Yeah, man. I think that's pretty much gonna wrap up the live. Again, my apologies for being a little late. We still hopped on here. Before we go off, let me take a quick glance at the Jappy pair, see how we looking. We were in buys. Okay, great. EJ got a bullish engulfing on the 4 hour. Nice. Probably can add to that. AJ bullish engulfing. GJ bullish engulfing. No, just continuation. UJ, not a bullish. So we do have AJ and EJ with bullish engulfings that we can potentially add to 4 buys. I believe I am still in buys. Let me double check. Double check on that. Well, I know I'm in buys. Let's see if we profitable though. Yes, we are. The EJ and the UJ is struggling. We right at break even. But my AJ and my GJ are well into profit, well over like 60, 70 pips on both of them. The EJ and the UJ was up there last week, but it retested, so I'm gonna leave EJ alone with this. But actually, I'm gonna add on EJ, but UJ I'm gonna leave alone. So I'm gonna add the EJ. Bam. Add a little change. Cancel these. AJ. GJ. I'm just canceling some sell orders I had from last week. I was basically waiting on the sign line for the Japanese pairs to either turn bullish or turn bearish. So I had sell orders and buy orders set on both pairs. I mean, on all pairs. And as you see now, in hindsight, the buys did work out. We never did touch the bearish side of it. But yeah, I think we're just gonna continue to monitor. I'm gonna say something. But we continue to monitor this bullish situation on all pairs, but specifically the Australian dollar. Like I said, we got two levels we're looking at. We're looking at 65.90 and 66.10. We'll be in touch on the Telegram. Everybody that want to link up, tap in. We want to get that community a little bit more thriving. We'll put more energy into it later as time permits, but that would be a nice little thing in the future for us to have a nice little community on there, away from the social media. Like, I really want to get away from the Facebooks and the Instagrams on the cool. If I could have it, it would just be Telegram and Zone on the cool. Because all that other shit is a distraction. Like, we had to work. We had to get to the bag. So even YouTube is a distraction. Real talk. So, but with that being said, we love YouTube. We love all social media because that's what gets the word out. But let's stay focused. Let's get this money and let's run it up. Yeah, man, another great week. Wednesday is going to be a powerhouse. So, anything you want to add if you're still on here, bro?
No, man, that was perfect. Well said, man. I
How the
mean,
family doing, man? Any updates?
huh? What'd you say?
I said, how the family doing? Any updates?
Man, tap in with me afterwards.
All right, baby. I'm about to get out right now.
But yeah, no, just to reiterate what you said, like yeah, be focused. Like, guys, you got like a lot of things that's brewing.
Look at the bottom ticker. What did it say?
What
Rose
bottom ticker?
5K.
Oh, yeah, yes. I mean, yeah, man. Like, don't force anything, but also block out all the outside noise. Like, even with 6 says, like, even to a certain extent, everything that we do on our phones is a distraction.
Fact.
Just keep it real.
Fact.
Keep it real. So you can just minimize that, or just kind of like focus on what's really important. Minimize all distractions as much as you can. Focus on that plan, and yeah, the rest is uh yeah, everything else will just take care of itself. It's just work after that. So let's do that, man. Let's put in this work and see what we looking like come the Olympics 2028, man.
Nice.
And the World Cup.
I'm about to
2026.
say, yeah, World Cup. Can we get about World Cup,
That's what
baby?
that first. So yeah, let's say we had 2 years, straight grind, straight focus. Let's do 6 months first, and then let's do a year. Then we could look into 2 years. So yeah,
Nice.
man, it's a marathon, baby. But like we go get it. We in it.
We are in it to win it, definitely. But we're gonna wrap this up. We'll be back next Sunday on
Yes,
time,
sir.
8
Yes, sir.
p.m.
Yes, sir. Yes, sir.
And we locked in, man. But yeah, I'm about to tap in with you, brother. But everybody, peace out. Love y'all. Let's get this money.
All day. Peace out, everybody. Till next time.